Hi everyone, and welcome to another episode of Value Investing Talks, where we discuss finance, business, and value investing. I'm your host, Eugene Alexiev, and I bring with me over 10 plus years of experience in running my own businesses. Some of them were sold, and some of them I run nowadays. Additionally, I am the founder of numphin.com, a comprehensive stock research tool for public companies. At Numphin, we cover over 60,000 companies listed on 70 plus stock exchanges worldwide. Our platform provides information in 25 languages, offering insights into finance, management, company ratios, and other essential facts. You can find the link to our website in the description. It is also important to note that all the information shared on this podcast is intended for educational and entertainment purposes only. We do not provide financial advice. So sit back, relax, and let's dive into the world of investing. Hi, everyone. Welcome to Value Investing Podcast. And today we have the special guest who is William Rassano, a Chief Investment Strategist at Inland Investment Advisors.
How are you doing, Eugene?
Yeah, it's a great pleasure to have you here and record this episode. To start with, could you please tell a little bit more about yourself and how you came to the position you are right now? And why did you choose the investment field in general?
Very good question, because it goes back to probably junior high school for me. And that is when I decided that I had to figure out, and here it's about the age of 13 or 14, and I had to figure out what I was going to do for a living. I don't know. It was just something I felt I had to do. And so I was doing reading, and I watched a PBS program about the stock market. And I saw the traders on the floor of the New York Stock Exchange and some of the guys in the pit at the Merc, New York and Chicago. And that was it. I was sold. That was what I was going to do. And there was no doubt about it. It was just a matter of breaking into a field where I knew absolutely no one. So before I went to college, I was working various jobs just to save money for my spending money, my tuition, that kind of thing. And in my teens, I did a very good, I had a very good job as a maintenance man, earning actually pretty good wages in the summers. And what I would do, Eugene, is save all of my my earnings from the summer, and that would take care of my spending money for my college years, so I could spend all my time studying, because I was destined, I felt, to go to Wall Street. It was sold on stocks. However, one day I saw a picture of Paul Tudor Jones, the legend, on the cover of Wall Street 100. And it was an edition that the Financial World magazine, which is no longer in print anymore, used to do, with the top earning traders on Wall Street. And that was it. I said, I've got to be in commodities. This guy netted 80 million on shorting the market with the 87, 88 crash. So I felt like, well, how do I get into that? Little did I know, the answer was right in the backyard. The Chicago Mercantile Exchange, I grew up around. I knew lots of people that worked there. And it was like a culture, in a subculture in Chicago. But I still had 2 more years of college. And believe me, this leads to real estate, how I got into real estate. So anyways, I did an internship while I was still in college in my last 2 years for a hedge fund that just happened to be headquartered down in Bloomington, Illinois, where I went to college. And I was doing some very interesting things. He was what was called a currency overlay specialist, whereby he worked with U.S. multinationals and hedged their currency exposure when dealing with foreign countries. So I got to design very interesting things, or help, I should say, design interesting things like option models, things like that helped alleviate the risk with sharp moves. Because back then we really got sharp moves in things like the Deutschmark, the Japanese yen, British pound, things of that nature. In addition to that, the company also traded commodities, just basic commodities. And back then, the trading style was more of a long-term trend following. That was the way you can do it. It was very tough to trade short-term because you didn't have the electronic access that you do now. So I learned an awful lot about trend following and commodities, and his brother also traded equities, and he did deep fundamental analysis, believed very much in Warren Buffett's style. So after that, for sure, I got bit by the trading bug. Went right to the floor when I graduated and learned from a group called R.J. O'Brien and Associates, who happened to be the oldest commodities firm in the city. And right away, I headed to the floor, learned quickly, became a floor broker, and realized that, hey, I don't need these guys in my pockets. I could learn to be a broker on my own and get paid to learn how to trade. So, with a partner, when I was 24, I took a second mortgage on my parents' house, which wasn't the smartest thing. However, like I said, I was 24, and my parents believed in me, and it actually happened to work. So, while obtaining clients, I actually got very lucky. And that lucky break was a cold call that happened to get through to Inland's chairman. We were able to then discuss some trading strategies because he's a very intelligent trader and still is. He then encouraged me to look into real estate investment trusts. So that's what I did. And before I knew it, our business was assisting Inland with REIT stock selection, real estate investment stock selection, portfolio rebalances, and even helping to hedge some of the real estate debt exposure. So that's how I arrived into the real estate field and real estate securities. And I really like the field, and I like the field I like it as an investment product for people because it is a collateral based cash flowing instrument, and it provides a good solid support for someone's portfolio. So as I told you, I'd eventually get to the real estate part.
So you basically started from this career inside a particular field, and then you moved little by little. That's fantastic. And you basically now still working in the real estate, right? So basically investing in distressed assets, managing portfolio, right?
Well, in a way, let me just change that focus, because at Inland Investment Advisors, we focus specifically on securities, publicly traded securities.
Okay.
However, we do have a large portion of our portfolios dedicated to real estate investment trusts. And with that, Eugene, we are always on the hunt for distressed real estate securities. So it's no different than looking for a deal out, say, out on Main Street, where you're trying to find an undervalued home to rehab or building to rehab. Looking for a real estate security that's undervalued is the same thing. So,
Right.
yes, we're always doing it.
I see. And speaking about your particular field, what are your core indicators and principles and investment criteria while choosing such type of distressed assets?
Okay. Let me just start with one thing. And this is a very important issue, or a very important principle that I think everybody should know. Remember that we all start every day at the right edge of the chart. What I mean there, Eugene, is you sit there and you look at your screen, your trading screen, and it's a chart.
Yeah.
It could be a candlesticks, whatever it is. And where do you live? You live at the right edge. Well, what does that tell you? You don't know what's going to happen tomorrow. Neither do all these big Wall Street analysts. We're all in the same boat. Okay? So that's where we all live. Okay? And remember, the only thing we can control is the risk. So that's number one core principle. And that's the most important, is controlling risk. So if I had to move on and talk about how we actually go ahead and take a look at securities, I would say there's two schools of thought. And I'm not sure, you tell me, do I need to go deeply into and describe what actually fundamental and technical analysis is?
If you want, you can just briefly describe general words.
Okay. So fundamental analysis, and it's very important if you're focusing simply on real estate, is essentially looking at anything that can affect a stock's value, from macroeconomic factors such as state of the economy all the way down to industry conditions. And it's pretty much that simple. But when you're looking at real estate and you're trying to derive whether or not an asset is undervalued, you are trying to come at the particular what's called net asset value, whereby you want to know what a piece of property essentially is worth. Well, when you look at a real estate investment trust, what are you looking at? You're looking at a portfolio of properties and trying to get a value of everything. It's as simple as, if it's trading below net asset value, it's undervalued. Above, it's overvalued. But do remember that some REITs do deserve a premium to net asset value. So that's where things can get a little bit tricky. So valuation is a little bit more than math and science. There's an art there too. And then, of course, there's technical analysis, which is very important when you're buying or selecting where to buy a security. Because I feel, and I know we feel here, that where you purchase a security is just as important as the security you're purchasing. You don't want to overpay, especially when you're value investing. A technical analyst believes that prices move in trends. And so what do? Everyone does pretty much the same thing. They're identifying areas of support, resistance. And that's okay that everyone looks at the same thing, Eugene, and the same levels, because the emotions are what differentiates various traders. And that's something you know. This business is 80% emotion, 20% technical. Yeah. I mean, I would say that we're probably, depending on what area of the portfolio we're looking at, we're probably more fundamentalists than technical analysts, because the bulk of our portfolio is core, and it's in cash flowing type instruments, because we do have a focus on creating cash flow and reinvesting that cash flow.
How do you see the current real estate cycle evolving, especially in the post-pandemic environment? Are there any changes about that?
Well, yeah. And I think interest rates are at the heart of the changes. Let me just say one thing. When it comes to real estate, the most important thing, especially when you're valuing anything, is leverage. And if you look at the Fed's hiking festival or feast that they've gone on in the last 2 years, from 0 to 5.25 or 5.5, whatever it is, that has had extreme effect on the real estate market. There's so many projects that have been put on hold. Nothing pencils out anymore when you talk to some of these publicly traded REITs. Look at the 10-year. Everyone thought this was over with until I just looked at the 10-year before I came in. It was at 434. That's damaging to an awful lot of real estate projects. And let's consider not only just what's out there right now and loans that are about to reset. Let's look at all the deals that aren't happening because of it. There's all kinds of economic activity that could be happening, and economic advancement that could be happening, but it's not because of the rates. So that's one major trend going on. If I had to look at different places I'd want to be invested in real estate right now, one place would be housing. And that's a simple supply and demand issue, because people right now with 2 and 3% mortgages, they're hanging on. They're not letting go of that. Why would I go into a 7.3% mortgage here in the U.S. as opposed to holding on to a 2 and 3%? Guess what, honey? Let's fix up the bathrooms and let's redo the living room. Does that make you feel good? Instead of going out and buying a new house, and people are feeling much better. So if you also look more deeper into that, the home builders themselves are basically saying, you know what? We are looking at the migration trends here in the U.S. And right now you have the millennials having families and they're moving out into more rural areas. Well, they're looking for starter homes. They don't want these big mini mansions. But guess how home builders make more money? It's just as much of a cost to build a big, beautiful home as a starter home. And they're saying, guess what? We're going to build the big, beautiful homes because we're making a lot more money. So if you don't like it, don't buy it, because we know that there isn't enough supply on the market. And I think it's going to be this way for a while. However, if you're going to buy into the sector, I would wait for a bit of a pullback because it looks a bit overextended right now.
Just a minute of your attention, guys. I really wanted to share a little more information about our project Numfin. It is a super easy tool for investors to analyze the company and get valuable insights about your current investments. We cover 30 years of financial data, and you do not need to spend a lot of time gathering the information about the company on tons of websites. Everything is available here on Numfin in one place. The information about the company, the competitors, the management, what are the financials, news, and much more. Don't waste your time. Go to numfin.com and register today. It is completely free for new users. The link is in the description. Are there any other insights, maybe looking on different asset types of real estate, for example, commercial?
If you're looking for distressed property at this particular point in time, look to areas that, and this is one thing that I would do if that's where I was looking. I look to areas that are operationally intensive. Hotels, senior housing. Senior housing is something that is definitely going to have structural demand in the future. But it takes a very intense management effort to operate a senior housing facility. So you want to find a team or a group that can do so and do so very well. Well, there's lots of REITs that out there that do it well and others that don't do it well. That's a great place to invest right now. Also, just to capitalize on the artificial intelligence trend, I would look and take a considerable look at the digital REITs, because that's capitalizing on storage. And storage is something that we're actually going to need for these artificial intelligence companies. And it's said that without what we already have right now in the digital REITs, as far as the storage capacity, if we didn't, most of these AI companies wouldn't be making the rapid advancement that they are. Others, I would look at, in addition, there's a trend going on right now in offices, believe it or not, where they're converting some offices to multifamily. That's a tough one because some of these office buildings are easy to convert, others aren't. And how you would actually get a look at that, I don't know, but some people actually can do the research and are able to go ahead and get a look at that.
And speaking about yourself and your career in general, would you please share some biggest insights or mistakes for our audience in order to learn from your work, your experience?
Absolutely. My favorite part. Remember that, number one, in this business, there's no indicator holy grail. I can't tell you, Eugene, how many probably man hours I spent looking for the indicator that was going to show me and have essential predictability power. Forget it. Doesn't happen. Keep your screens simple. Okay? This whole project, it's a lifelong learning journey. That's what this is. It's a journey, and it's a marathon, not a sprint. Okay? And I cannot exaggerate patience. And if you don't have patience, it's something that you can learn, but you are going to go up against your demons in a bad way. And ultimately, think about it. Who are you competing against? You're not competing against other traders in reality. You're competing against you, yourself. So either you come to terms with your demons or you figure out how to ignore them, your internal demons, or else they will overcome you. And they've overcome me several times. Trust me, I've blown out many a times, many accounts. And I'm not embarrassed about it. I'm not embarrassed to say it. It's part of learning. And it's also part of the process whereby you have to be able to take that, getting knocked down on the mat over and over, getting right back up and back in the game. And that's what makes this such a tough business. But I'm going to tell you, if you make it through and to the end, it's very, very rewarding. It's true freedom. It really is. Losses. You have to accept losses. Now, I understand why people don't, because back in school, an A is good as far as the grading system goes, and an F is a failure. So people associate taking a loss with an F. Well, that's not true. A loss is feedback. A loss provides you with information and basically tells you, well, you did this wrong or you did that wrong. There's room for improvement. And a loss is risk control. You're saving your money. You're saving your, we used to call it, grub stake from depleting. And don't overtrade. Too many beginners see the market moving and they feel like they have to get in there and do something. And I can remember reading about Jesse Livermore, who was the best trader of all times. And this was back in the 1920s. He profited and blew out several times. But he called the crash of 29 and said he made most of his money while he was sitting on his hands. And there's a lot of truth to that.
What would you advise this type of people? Where to start, or maybe some books to read, some people to watch after?
I need to say this first, I believe. It's sort of a disclaimer. If I mention someone's name, they're not paying me, apparently. I guess I needed to say that. So with that being said, I would look, for traders who really want to know trading, it matters whose books you're reading, okay? You want to read books by credible people, guys that actually did it. Jack Schwager did a beautiful series of books called the Market Wizard series, where he actually was able to interview some of the best traders on the street way back in the 80s and 90s, and they're still the best traders on the street. Now they're running the biggest hedge funds. These guys opened up, and they told you everything, their failures, how they got over their failures, how they prospered. I reread those books whenever I can because you learn something new every time you read them. Then, if you're looking at economics, the economy, if you're more of a macro player or you like to put macro into your analysis, I would look at something called the book report. It's done every day. It's, I believe, a podcast, and it also is a newsletter that I read every day. That's one. I mean, it's the author is amazing when it comes to the economy, and he explains it in such a way where it doesn't come out like trying to read Mandarin for someone that doesn't speak Mandarin. I would also look to activist investors. And this is more for value players, okay? Now, I don't know if you'd agree with this concept, Eugene, but I believe activist investors are the ultimate value investors, okay? Because if you think about it, they spend years doing a deep dive into a company, and they really put it on the line when they go ahead and buy a controlling stake in a company and begin to proxy for board seats and things of that nature. And some excellent books were written by Bill Ackman, Joel Greenblatt, and David Einhorn about activism, where they actually described actual campaigns they were in. When the Wolves Bite described a campaign between Carl Icahn and someone else. Carl's obviously made the news, not so much in a good way lately, but he goes back to, he's one of the old corporate raiders from the 80s. And there's been books written about him that are also excellent. Books about T. Boone Pickens. Great books. These guys talk about concepts that aren't really talked about all that often. Warren Buffett, of course, the man. Anything written about him is a great resource. So I would start read. But podcasts are also excellent sources of information because you're hearing from people that are real players, and they don't mind divulging what you would think is confidential information about their approach to the markets, whatever it might be.
Really great recommendations of the books and podcasts and resources. I think we would put this list in the description of this podcast so our audience can go and look for these books and add them to their lists. I guess my final question is, are there any final words or maybe some final pieces of advice for our audience or for investors, traders, business people as well?
Sure. There's one thing I wanted to get to about real estate, and I noticed the word distressed assets came up a lot. And finding a distressed asset in real estate or a real estate security, which is what we did mostly, is make it basic. Okay. What are you actually trying to do? You're trying to get down to the value of the property. There's public information available on a REIT or a real estate investment trust that breaks down everything you need to value a piece of property. You can get the cash flow on that particular property, and you can get the area so you can comp out that piece of property. And you could come up with your own blended cap rate. I mean, if you really wanted to put in the work, you couldn't find distressed real estate investment trusts. Why is that better than doing that with an undervalued piece of property? I'll tell you why. Because it's liquid. If you put a lot of money into an undervalued deal on Main Street, what if you need to get out? Well, the odds are if you're trapped in a piece of property, and remember this, your piece of property might pencil out at a certain price, but it's worth only what someone else is willing to pay. But a real estate security or a REIT, there's always a bid offer, and they're all very liquid on the New York Stock Exchange or NASDAQ, wherever it might be listed. So that's one thing I wanted to get out there to people who are interested in that particular area. What I would just say to people is just remember that this takes time. It's not an easy venture. It's not, we had a double whammy or a double punch. We were entrepreneurs, and we were entrepreneurs in this field. So it was double tough for us. But things do turn the corner. You will turn the corner. You have to keep at it, though. That's the toughest thing, is keeping at it. And if you really are serious about it, got to make a lot of sacrifices when it comes to working on this particular type of journey into trading, no matter what area of trading you go into. There's so many different areas now you can go into. And I think that's some pretty good advice. And you have my contact information. I'm happy to leave that on your site, Eugene, and anyone can feel free to contact me with further questions.
Thank you so much for your time. I really enjoyed that, and I'm happy that we managed to record this episode.
Okay, well, I was very excited to do this, and it's been great. It's been a pleasure, and I'm very happy that you were able to get in touch with me to arrange this, Eugene.
And to our audience, I also want to thank for listening, and we will meet you next time. That's all for today, guys. I hope you really enjoyed the episode and found it useful. Don't forget to subscribe for more. Check out numphin.com and see you next time.